All right, everyone, welcome back to the channel. Thank you for tuning in. Let's go ahead and jump into today because I want to share a video with you guys because so many people struggle in the markets. They have a hard time trying to figure out the direction of the market. They get caught up with the idea of not understanding market structure. So let's talk about how we can go about losing less trades and winning more. All right, during the New York trading session. Simply, one of the key, not gonna say ingredients or recipes, I'm gonna say the core elements to trading. And I said it before, I'll say it again, and I'll say it many, many more times after this video here, because most people don't do what I do, and that's stressing the high points of what every trader, beginner trader, intermediate to advanced level trader needs to know. All right, there's so many people out here that truly believe that they are professional traders or experienced level traders because they found a strategy that works. But one thing they may be missing is understanding how to read the market correctly. All right, they're just looking for setups. That's all they're doing, looking for setups. But they're unable to read the market. Lots and lots of traders struggle with this concept. So I'm going to pretty much break down right now the core or most important recipe, ingredient to it all, the thing that holds this the idea of trading together like glue, like it cements it together. The moment, if you're already trading and you're using a strategy that works for you, if you understand market structure, I'm telling you, it's going to take your trading to the next level. So I'm going to show you, because here is something that most traders, again, they fail and struggle with. So we're going to go up here. I'm going to bring this down, so bear with me. I'm going to show you just a simple example of the structure of the market using a line diagram. I talked about this before. I did a great video on it. It's titled Market Structure. Just go onto the channel, click on the little magnifying glass, and type in market structure. A few videos will pop up. I did one probably about a month or so ago. Great video breaking things down. But I'm going to do that. I'm going to kind of cover that again here in this video again today. But I'm going to show you some additional things. Now, most people have a misconstrued concept of market structure. So what they'll do is they'll see the market doing something like this right here. I'm going to show you. Okay. Doing this, breaking structure to the upside is what we call breaking structure. All right. And then it pulls back again and it breaks up higher. Okay. And then maybe we got to pull back again to right here. And then it pulls back higher. And then it starts to fold back down to the downside here. All right. And then we're going to pull back. And then it breaks lower. All right, and it tests this area here. Now pay close attention. If the market is trending in a certain direction, especially to the upside, okay, in this example here, making higher highs and higher lows, most traders are looking for pullbacks to every either area of support, which is this is to be a break and retest. If the market came back and did basically pushed up, pulled back, broke higher, and came back to this area here, this would be a break and retest back down to a key area of support is what I'm trying to say. Understand that. So again, the market tests this area here. Okay, it comes back right here. All right, pull it back right here and test, again, support right here. And then it breaks higher. I don't trade support and resistance. I trade supply and demand. So if we're looking for supply and demand setups, they would be back down at this key area here. So typically, if the market doesn't come back down to this zone, which I'm going to mark right now, this zone right here, say this is a zone that we saw on the candlestick charts. It doesn't come here and it pushes to the upside. Well, it's just testing support to me, and it's just pushing to the upside, breaking structure again. And then maybe it comes back to this. Comes back to this area right here, to this a break and retest of a level right here, back to area support. All right, and then it shoots up again, or maybe it just comes down to this area right here. This will be demand, right? If you don't know much about supply and demand, I have tons and tons of videos covering the strategy and how I trade it on a daily basis. So please go back and watch that. We have great traders over in the Discord community. So if you're interested in becoming a Discord member, find the link to the Discord down in the description portion of the video and invite yourself in. It's free of charge. There's a couple channels there. Most of us congregate over on the trading floor. That's where we as traders, we're sharing screenshots of our trades or levels. I post on there too as well. I've got many videos here on the channel where you can see me trade my live trading sessions and or my live recorded trading sessions, and I post videos talking about the trades I've taken, and I've also posted those trades over on the Discord. So But lots of traders, what I'm trying to get at, trade similar to the style and the way I trade using multi-chart confluence, and it works. You just have to be the key to the end of all the trading is really being patient. You know, strategies work. I'm not gonna say all strategies work, but they most work if you put in the time and effort to test them out and make sure they work correctly, and find your own variation of how to trade them. Is what I'm trying to say. But again, the market is trending to the upside. This will be support. This will be an area of demand, aggressive buying. That's what demand is for all those that don't know. Pushes up again. This would be demand here, this area here, for all those who don't know. This right here would be support. Now, if you're a support and resistance style trader, this video does not really, you know, it's really not for you. It's for individuals that trade or are interested in trading supply and demand during the New York trading session. Okay, so this would be demand. If we're looking for rejection, what I typically do is I move down to my lower time frame chart and look for rejection. If this is my higher time frame chart, let's say, you know, this is a 60 range chart, and this 60 range chart is my higher base chart or higher time frame chart, and I'll be marking zones off of this area. I mean, I'm marking areas of supply and demand, and then once the market pulls back, if it's trading to the upside and it pulls back to a key zone like it did right here, it pushed up, pulled back. We broke this area here, okay? You always hear me talk about breaking structure. That's one of the key steps or important elements to my trading, how I trade, okay? Push up here, pull back, break structure. It means it took out the high, all right? The prior high right here, this high right here. And then I'm going to go ahead and mark off. If this is an aggressive area buying right here, I'm going to mark off this demand zone. If the market comes back to it, I just move down to my lower time frame chart and I look for a setup. And that setup involves a demand area or area demand to be created in the market to pull back to that area on the lower time frame chart. Once it gets there, then I'm looking for rejection, meaning a break in the close of a candle above the last down bearish candle in this sense here, because we're talking about going to the upside, going long. So the market comes back to this area of demand. I'm just showing you a simple diagram of, again, market structure. Okay, remember we took this area here to take it back up to the upside, at least back up to the high. And if you look to the left-hand side of your chart, and if you saw some additional areas, say imbalance of where the market could try to go in and fill, then maybe you're going to ride that wave back up to the upside. But pay attention here. Look what happens now. The market moves lower. We break structure right here. Now, most people think immediately once the market breaks structure to the downside, things have shifted, meaning we've started moving from trading to the upside, moving to the upside, and just started, you know, moving lower. So the first break, and I talked about this before, of an area of structure does not really tell me for sure, or give me the confidence to know that I should be looking for short setups. Okay, would I take the market or take a trade going short if we get a pullback to this key area of supply right here? So if this was supply, after we just broke an area of structure to the downside right here, would I be interested in taking this trade setup right here? Of course, yes. We pull back to it, I'll be interested if we get the rejection on the lower time frame. Again, I don't take my trades off of the higher time frame. I'm looking for, once we do tap into them off the higher time frame, I'm looking for a nice clean setup to take place and unfold. And part of the strategy I trade, which I talk about the strategy in multiple videos here on the channel, so please take the time to watch the videos. Or if you want to, you know, I'll put together a series of link by link of videos, so you do not have to watch over 600 videos, because I've got a lot of content here on the channel, which means I'm pushing content out because I want to see people become profitable and successful. Trust me, you know, I'm just a very humble person that started doing what I'm doing because I want to share the way I trade, my personal experience, and how I trade each and every day. And there are people who trade very similar to, if not mirrored, the same concept of how I trade over in the Discord community, and they are successful now. They are becoming profitable. You know, whether it's they're passing these prop firm evaluations or they're trading with their own money, they are making money. Okay, so if the market was to tap into it again, either taps into a higher time frame zone, then I'm moving down and I break down the steps in multiple videos of how I trade it. But this video here is just really trying to get you to understand, if you truly want to be able to be successful in trading the New York session, then you're going to have to really, and it really doesn't matter, boil down to be just the New York session. But the reason why I'm speaking of the New York session, because that's where most of the volume is coming. You know, we're talking about day trading. Most of the volume surrounds during the New York session, okay, which is primarily open up from 9:30 Eastern time, from 9:30 to 4 pretty much, okay. But pre-session really starts about 8:30. But anyways, a pre-market, I should say. If the market was to come back to this area here, this would be an area of supply. And yes, why? Because aggressive selling, I would be looking for to entertain an opportunity to go short. All right, but I have to wait for, once we tap into the zone, if we did back to the upside, to move down to my lower time frame. But what I'm trying to say here is this right here. The market pushes lower. It breaks structure. Now, at this point, am I thinking that the market is actually the trend or the tide has changed completely from where I need to start looking for, instead of looking for longs, looking for shorts? No. No, to be honest with you. What's going to cause me or my mind to shift completely is when we get a first break in structure right to the downside after taking out a prior swing low right here. And then it follows up where we got a low, okay, a lower high, understand that, and then a lower low. Once we broke and made a low, then we made a lower high, and then a lower low, repeating that again, then I would be more confident in say that the market, the tide has shifted from looking for positions to go long to go short. What a lot of people end up doing or get caught up doing because they completely do not understand how to read the structure of the market correctly, they see all this, and it's been doing that for a period of time. The market pulls back and say, oh, it's just pulling back to some key area or level below, right? And then they start looking for opportunities to continue taking the market back to the upside to go long. You can do that, but you must understand the moment we start to break structure to the downside, and yeah, there's a possibility if we break structure to the downside and we get a lower high and make a lower low, that yeah, the market could tap into some key area of demand, all right, or even maybe a high probability area of support. You know, I don't trade support resistance, but maybe it does after we get a low, lower high, and lower low. Okay, after breaking breaking through a key area structure, and then it starts to push back to the upside. It can do that. We don't control the market. We trade based on probability. We trade based on what we see. We trade based on experience of backtesting strategy and seeing how the market has moved and reacted over time. So as the market makes a low, lower high, and lower low, again, I'm going to start thinking with experience to start looking for shorts. Now, am I going to pay close attention to areas of demand that rest below? Yeah, like this area right here. It taps into this key area of demand, say for example here. All right, would I take this trade? It depends on what the market looks like when it gets back to this zone here. What does, what's going on with price action when the market taps into this area? Will I have enough area to trade back up to maybe a possible area of resistance right here? Okay, or did the market just slightly break this area, this low, lower high, and lower low, break structure, continuation to the downside slightly, and maybe we tap into a zone, and then if it does, can I flip the trade to go back long and maybe take it back and fill some areas of imbalances within this leg here that came out of the swing? Possibility. That's why I always say pay close attention to price action and what has occurred. All right. Yes, it comes back down to this area of demand. Yeah, I probably could take it back up to at least this area of resistance. Okay. It all depends on what the structure of the market looks like. Were there areas where the market filled in imbalances as it was moving lower to the downside to give me a shot if we get rejection here to maybe take it higher? It all depends, because you must understand, if there are imbalances that the market has left or has just left open gaps or left open on the move to the downside, it could go up there and test a fair value gap, a gap or imbalance, if you want to call it any one of those, and reject it and then continue pushing lower. Okay, so the market could come up here. Let me get away, do away with that. The market could actually pull back to this area. Why did I select that? Sorry, guys. This area right here, come to this area of resistance, fill in any imbalances back to this key area of resistance here, and then shoot lower. Okay, so then if we start breaking lower again, making a new low here, a lower high and a lower low, yeah, we're definitely, you could say we should only be looking for what? Short opportunities. But I'm at this point where it makes and breaks structure here and it makes a lower low, meaning it makes a low, lower high, lower low. I'm already looking for lower opportunities. But let's say it does this right here. Let's do away with this pull back to resistance here. Let's say that it pulled back to this area right here. Now this could be which we all know by now, those who've been following the channel should know that this is what could be an area of supply. Aggressive selling to the downside. Now, I'm interested to looking for the shorts. Why? Because the market's already proven it's just broke structure here. Okay? At that point, I'm not 100% sold that the market is ready to start moving more to the downside until it does that low, lower high, and lower low swing down. Then we broke structure here. We broke structure here, and we broke structure right here. Once I see that, and we got aggressive selling to the downside, all right, and we pull back to a key area of supply right here, would I be interested in going short? Definitely so. Especially if there's definitely areas of imbalances that need to be filled right here. Or let's say the imbalances were already filled back to the upside as we were pulling back here. Great, because I'm going to run it back down to the downside right here. and aim for this low right here. Now again, pay attention. If we do move back down after rejecting this area of supply right here, again, you want to move down to a lower time frame chart and look for the setup. I personally do not take my trades off of a higher time frame chart. There are people who do that, maybe swing traders or position style traders. They'll wait for a bigger rejection or a major sign of rejection off a higher time frame, but I'm not going into that because I don't trade like that. So what they'll do is, what I'll do is I'll move down to my lower time frame chart and look for a setup off my 12 range chart. That's my entry chart. Again, I'm looking for the market at that point on the lower time frame to break structure to the downside. Or you can look for, like a lot of traders here do, there's two different ways I actually like to trade it. Now what I typically won't do is I won't take lots of times is if this was supply off the higher time frame and then I see a supply zone off the 12 range, and the market pulls back to a key area supply on the higher time frame, taps into it where I see a 12 range supply zone. Sometimes I may take that trade depending on the rejection when the market gets back to on the lower time frame. But typically what I like to do is on the 60 range chart, when the market taps back into a higher time frame zone, is I want to wait for and to see the market start to break structure on the 12 range chart, my entry chart, and look for a demand setup to take the market going back lower. Now, you can do that pair chart setup to where you maybe have, the market taps back into a 60, and then you got the market pulled back to a 24 range supply zone, and then the 24 and 12 aren't too far off, okay? And you can see a nice setup there. So you're getting multi-chart confluence. A lot of traders like to call it clustering of zones. Yeah, you can look for a nice rejection when you've got multi-clustering on multiple charts there to look to go short. But in this scenario here, if I'm just taking looking for opportunity back at the supply zone and I just move it over to my 12 range chart, I want to see a breaker structure back to the downside, pull back to a key area demand on the lower time frame to go short. But what I want to show you here is that once you do, or if you enter this short, where I'm going to be interested in going back down to is just the lows, okay? Because the market really hasn't broke through this area. It hasn't taken out this level yet, so it can bounce right here back at this area of support. This is still considered support until the market breaks through this area. Understand that. So the market can do something like this, okay? Come back down here, test the lows right here. This is support still at this area of demand, and then reject it, and then you can get a push back to the upside to where it breaks. It starts to push up, pull back, break structure here, but we also broke structure right here, okay? And then what it's doing at this point here is taking out internal or minor areas of structure back to the upside, and it could possibly come up here and take out this high. Then if it takes out this high, then we got a major structure break, okay? So the market could do something like, let's move this down. Do something like this, pull back, break higher, okay? Now we broke a major area of structure. Could this be demand out here? Yes. Could this be demand right here? Yes. So the market could pull back to right here. This could be an area of demand. This would be support right here. I don't trade support and resistance. This could be demand. And we broke structure right here. Okay. Major area structure. And then if there was, structure the market where it was coming down, to the downside right here, it was taking out levels over here, and you saw those imbalances that the market could actually feel. Okay. Maybe it took out an area of structure right here, okay, maybe a level, and then it's starting to, after it broke right here, it starts to want to move higher, pull back. We can aim for imbalances resting to the left hand side of the chart, okay? So I'm gonna just kind of show you an example of that on the candlestick chart right quick, but hopefully you understood this diagram to a degree in which I'm talking about, because at this point here, once it starts to move back to the upside, all right, because the market can shift and turn, and at any given point, it starts to take out internal structure or minor areas of structure back to the upside, break structure here. Once we get a major breaker structure back to the upside, now we're back in bullish mode. Okay, we're looking for longs again. Pulls back to demand right here, rejects it, then you can look for opportunity to go long. So let's look at the chart. I'm going to show you an example I'm talking about right quick. All right, so now we'll look at the candlestick chart. This is a higher time frame, but just eliminate that out your mind. We're just looking at the structure of the market, because structure of the market, you're going to be able to identify it on no matter the time frame chart, if it's a higher base, lower base time frame chart, doesn't really matter. But I will say this, like I always say, if you are a beginner trader, someone that's not advanced, someone that is more still in the process of learning, or maybe you are trading and you become profitable, consistent, but you're still kind of airing out the kinks. Let me say this: always say trade in the direction of a higher time frame chart. Like this is my 60 range chart. I would be looking at the structure of the higher time frame and then trading and making my trades on the lower time frame in the same direction with the higher time frame. But again, I did a video yesterday about talking about how you can take trades. Well, I'm not even going to go into detail about that because, you know, this is probably more so people who are watching this are probably more beginner level traders or those that are really trying to understand market structure in general. So just do away with the idea that this is a higher time frame chart. We're just trying to cover the premises and basis of focusing in on market structure because it is a key and essential if you want to be consistent in trading, especially it doesn't matter the actual, you know, session you trade, but I'm talking about the New York session because that's the one that most traders trade because it has or carries the most volume. All right. So look, the market is moving to the upside. Show a similar example to that on the line diagram. We're moving up, breaking structure, pulling back, breaking structure to the upside, all right, and pushing higher. But look what takes place here. I just want to show you this. As we moved up here, broke structure, we started pulling back to the downside, breaking some, you know, small areas to the downside, turning back around, and then what do? We push back higher, okay? So even though the market was folding lower and making lower lows and lower highs to the downside, it hits against some area of, this is actually the demand right here. Now, this is what I like to classify as tested because we pull back, we feel in the imbalances or gap back to the zone right here, all right? And I cover more about that in many videos and how I actually trade using the strategy I trade, okay? So this would be a demand zone. You must already know that a demand is aggressive buying here. So when we pull back to this area, I wouldn't be interested, even though this is a demand zone here, because it is an untested zone. Not untested, tested zone. So it makes it a low probability setup. Can the market still reject as it did right here? Yes. Okay. Maybe there were some orders that they were still looking to fulfill back at this level here that didn't get filled, even when they, you know, when the gap closure or imbalances were filled in and they came back. Maybe they were looking to put on more resistance, possibly to take the market back up, and it does push higher. But what it does is it comes back up here and takes out this high right here, okay, at 982. Takes that high out. Now, what is all this right here? This is a significant area of demand, okay? We're going to go ahead and draw that right here. We'll bring it out because we're going to see later what took place here. Let's be a bit more, I guess, precise right there. But anyways, it pushes up, pulls back, break structure again to the upside. All right, so this right here is a small area of it. Well, not say small because, well, yeah, let's say area of demand. It is an area of demand and it is high probability. Both these zones are high probability setups because the market didn't come back immediately and fill in the imbalances or gaps back to the zone. Same here. It didn't come back immediately. It pushed up several candles right here before it came back. So it pushed up in a high, higher low, higher high, higher low, demand, higher high, breaking structure, pulls back. What takes place right here? Well, you should already know we didn't break anything on the way coming down, right? We tapped into this high probability zone right here, which was untested. Okay, comes down, fills the imbalances back down to the downside, of course. All right, we get the rejection, and we're looking above to see where we can take the market back up to. I want to fill some imbalances back to the upside, right? Also, so there's no imbalances right here. There is a small area of imbalance right here. So as the market breaks up, right here, and it fills in the imbalance right here, there's also an imbalance right here. So it breaks up, you see it, pulls back, and breaks higher. So my area in which I want to definitely take a look at taking profit at is definitely going to be back in this area right here at, say, 31 or 32 area for sure, okay? And it may run the high here, but I'm going to take most of my contracts off right here for sure. And I don't know what's going on the left-hand side of the chart, so I can't speak on that. But let's say that the market had already broken through some area or level when it pushed up right here. And then there were imbalances that were resting right above. Now, most times when you see that, the market comes back to test an area of demand. It's going to go up there, test this area right here first, okay? Again, I'll take out most of my contracts, maybe leave a runner to trail behind. And then there may be an imbalance to the left-hand side of the chart that it pushed up to fill that area imbalance over here. And that's why probably it hit that fair value gap, imbalance, and moved back lower. Now take a look here and see what it does. It pushes to the downside, break structure here. Am I interested at this point in knowing that the market is really going to start pushing lower? No. First break of structure. When we get a low, a lower high, and then a break of structure, then I'll shift from saying, okay, my bias from long to short. So we broke structure here to the downside. This is an area of supply resting even right here. Let's just show you. Right here. High probability area of supply. Why? Because there is a gap. There's an imbalance. There's a void resting back to the zone right here. What happens? The market pushes lower, pulls back, and then what happens right here? The market rejects this area here and pushes lower to break through this area right here. Okay? Now maybe ask yourself this question, then how did you know that was going to break this area right here? Well, look what happened when it started pushing higher. Pushed up, pulled back, feel the imbalance, pushed up. When it came back right here, it automatically feel the imbalance because it closed lower, feel the imbalance. So it's going to move and break through this area right here at 946 or 947 below this low right here. Continues running to the downside. Now, what do we do now? We tap into this demand zone, okay? Now you ask yourself this question, but we're breaking structure to the downside. Why would you be interested in taking this long? Because look, there are imbalances that how should I say this? There are imbalances back up to an area of resistance in this case here. All right. This is a high probability area of demand. There was aggressive buying that took place to the upside here, and the market hadn't even come back and started feeling the imbalances back down to this demand zone even yet. It took it a while. It broke structure 2 times at least before it came back down here at this high probability of demand zone. It taps into it. We're going to be interested in taking a trade if we get rejection off of the lower time frame chart. All right, so the market tests this demand area right here, okay? And as you can see here, we have imbalances in between as the market was moving to the downside back to the zone. So what does it do? It rejects the area, high probability, untested zone, taps right into it, rejects it. It's going to go back up there and start filling in these imbalances. The market has to correct itself. I'm not saying that it couldn't just have pulled back to, pull back and then push lower, but the chances or the probability runs high, okay? Especially where it's tapped into a untested high probability zone, especially off of a higher time frame chart. And then you have imbalances resting above. The market's going to try to, if it rejects here, go back and at least fill those areas back to this area of small area of resistance right here, and then maybe possibly test higher areas. And as you can see here, it ran back up to the upside here, filled some imbalances, pushed back, made a lower high, and then a higher low, and then pushed up and started breaking some areas of structure back to the upside. Took out above here, it's 991. As you can see, made a high, higher low, higher high, and then it pushed up. What did it do? It ran all the way back up to the high up here and filled in all those imbalances back to the upside where this high here is, and this is resistance. There was imbalance resting in between here, fills it all the way in. Now, is this supply right here? Of course, this area right here is supply. All right, so when it gets there to this area right here, supply right here, it rejects it. It's at least going to come back down and test this area here at 710. So maybe you got into it, you could take a trade. Again, I don't trade off the higher time frame, but moving down to a lower time frame, somewhere maybe in this area right here in the 20s, somewhere in that area there, back down to 10. Pick yourself up, probably 10 points or more, plus in that area, okay? And then there's also an area of imbalance resting here and a small area here, and it continues running lower, filling every bit to the downside. Because the mode, as you can see here, at this point here, we were moving to the downside, breaking structure because we broke structure, made a low, lower high, and then lower low. So it's moving to the downside. But all it's doing on the way back up here is taking out internal areas of structure or minor areas of structure back to the upside. This is the major area here. And yeah, can you trade to go long in between this area once it starts taking out minor areas of structure? You can. You can, but just be mindful that we've shifted to the downside because we started making lower lows, lower highs, and all it's doing is re-breaking back to the upside, and it can still push lower in what you did. It came back up, it filled the imbalances, like I said, back to the upside before pushing lower. So this right here was an area of resistance right here. I mean, and demand. I mean, I'm not demand, guys. Supply. Sorry about that. And as you can see here on the higher time frame, it taps into that supply zone to the tick and pushes away from it. And I talk about that in many videos about the market tapping into a zone. The moment it taps into it, if it just taps it and then it wicks away from it, that's a aggressive area of or a sign of rejection, where it doesn't pull deeper to or move deeper into the area, the zone right here, like the supply area. It didn't push deeper into it. In this case here, this is where you got to be careful because the market does push deep into the zone here. As you can see, it almost tick to the bottom end of the zone, but then it rejects it and pushes higher. So I'll state that as well as a tip. If the market pushes deeper into a zone, especially even if it's high probability zone. If it pushes deeper into it, be more on the fence about what could take place there. I'm not saying that not take the trade at all. I'm just saying be careful. Make sure you get full on rejection. Look at your lower time frame. You know, I talk about the strategy on multiple videos. So I would watch a series or watch some of those videos. If you want to become an elite member, again, like I talked about, I have a link by link list of videos. I call it the playlist video, to where I picked out and hand selected a series of videos. Okay, so you don't have to watch 600 videos, which cover the most the core concept or the most important parts to surrounding how I trade. So those are a series of private videos that are accessible to the elite members. Okay, and that is a tier membership program that I set up through YouTube. That is only $6.99 a month. I mean, lots of you guys, I'm sure people spend $7, $8, $10 a day on a cup of coffee. We're talking about $6.99, and this can be life changing for you. Trust me, you can come over to the Discord and you can ask members, and they'll vouch and say, yep. I mean, I would definitely recommend signing up for it and enrolling in the $6.99 elite membership program. The way you can join it is if you click on the join button, click that join button, or you scroll down in the description portion of the video, you'll see a link right below the Discord link. It says become a member. Click on it. You'll see two tiers pop up. One will say loyal channel supporter. The other one will say loyal channel member or loyal channel supporter. That's the one you want to choose. $6.99 a month. You get the video playlist as well as the trade breakdowns, to where I go in depth into trades I take so you understand those trades. Okay, I'll walk through the strategy. I talk about marking the zones off of the higher time frame, moving down to the lower time frame, looking for the setup, how to get into the trade, all that. Okay, and that's covered within that elite channel membership program. Again, click the join button or find the link down below in the description. But that's all I want to talk about today and share with you. Please take the time to go ahead and drop a like on the video if you found value in the content. I wanted to talk about, you know, how you can increase your odds of winning during the New York session by simply grasping, understanding market structure. Yeah, you may be just trading specifically based off setups and looking for certain setups, whatever the case is, but maybe you don't understand market structure to the T. So then you bridge the two together, and now you've got a master recipe that's going to help you be a consistent and profitable trader. That's all I have to share with you guys today. If you haven't taken the time to go ahead and subscribe to the channel, please take the time by clicking on the sub button. Make sure to turn on all your post notifications. And that's pretty much all I have for you guys in this video. Again, if you're interested in joining the Discord, find the link to the Discord down in the description portion of the video as well. Take care. See you in the next one.